Hello, Maverick traders. Welcome out to your market roundup September 1st. Corey here with you. As always, a quick reminder to make sure you follow your trading plan. Let's get to it. So, Thursday, we saw a nice little bounce back in the markets. We were from red to green. Most of the markets turned positive, with the exception of IWM, the Russell 2000, which finished down about 1%, but still rebounded a bit. Oil was up. Gold continues to sell off, and gold really didn't see much of a bounce. We'll take a closer look at gold specifically because we've had that in the bearish list. Advanced decline line, 68% of stocks going down, 28% going up. Most of the recovery came late in the day. And the 50-period moving average has turned bearish, two-thirds of stocks now below that moving average. I've been suggesting for the past few weeks, look, we're in a bear market. We're probably going to roll over. But interestingly enough, for a short-term tactical trade, I'm actually bullish right here after today. Jobs report brings about volatility. Now, this is one of those weird circumstances where a bad number is probably good for the market and a good number is probably bad for the market because people are going to take that as what the Fed's next step is and whether the Fed will back off and so on. So this might be a case where a bad number is good for stocks, a good number and a lot of job gains might hit the stock market because that would bring about more Fed hawkishness, more Fed raising of interest rates, etc. Nvidia declines on news that China, well, the US is limiting China chip supply. And of course, Nvidia sells a lot of chips to China. So the limitations on that is basically a limit on how much they can sell, how much money they can make, and such. Now, as we look at the markets, the S&P, so where are we at in sort of context? Well, I also did the market roundup on Tuesday, and I talked about that my expectation here is that we're in a range between, I'll call it this high. This is the downtrend line if you were to take it back, and you can kind of draw an uptrend line here, which is basically what we hit today, and I think that's perfect. It's exactly kind of the pattern that I think, which is a neutral pattern. I think we're staying within this range. Now, ultimately, we're more likely to go to the downside. I still think that low is intact, but tactically, I think you can kind of ignore the moving averages. They're all bunched up. They're going sideways. This is the time where it shows you the indecision, and more indecision should reign. So a little bit more of a rebound, and then they try to sell it off, and they rally, and it's just going to be a bit choppy here in my view. NASDAQ, same thing. You're in more of a triangular pattern, and I think this is the bottom of the range. So next step is short term, a little bit of a relief rally. Now, as we look at the heat map, we had highlighted, well, I specifically had highlighted for a few weeks, the large cap healthcare names. And I talked about on Tuesday, I pulled up the J&J chart, but I said if you're playing Bristol Myers or Pfizer or whoever, I think you got to take profits on those. And here's kind of the bounce back and the recovery. I think that trade is done. I'm not even looking to short those on the bounce or anything like that. I think that was just a setup, an opportunity. They went down sharply. Take our money, run. The next trade, I mean, this is kind of a mixed bag. Energy still struggling. It was more deep in the red today. Semiconductors, like we talked about on the Nvidia news, down on the day, a little bit more green in healthcare overall. But really, for me, it's going to be a mixed bag of what I'm looking to trade next. I think in terms of the markets, give me the next week or 2 week. I think we bounce. I think we're going to rebound back up here temporarily. So I'm short-term bullish in terms of the market and just for the next trade. Now, let's take a look at a few charts here. On the bullish and bearish list, there's not really a sector emphasis as much as just some opportunities. Because I'm more bullish in the short term, I think these three are more actionable immediately. And I think these three are better on the rally. So I was actually looking for charts on the bearish side that I would be more interested in shorting on a rally. Not so much today, tomorrow, but on the next rally that happens for a week or so. So On the bullish side, I think EQT, this is in the energy space. We've been trading it, highlighting it. I highlighted it first down here as a buy. I think you're in a full-fledged cup and handle at this point, and I think we go back up and through there. Nat gas prices, I just find it hard to believe that they'll go down dramatically, but you got to be watching this low. I think if you break down and you take out that low early tomorrow, you just pass on the trade. But assuming we hold here, I think we're going up and through 50. Now, Hilton looks interesting. You can actually look at Hilton or Marriott, MAR. They're basically the same trade. They're basically the same type of stock, and both have the same type of setup. Here, we've pulled all the way back to this prior gapping point and right at the 50 period moving average with a nice bullish reversal today. I think this has been a bearish to bullish trend reversal. I like Hilton, but if you pull up the Marriott chart, you can't really tell much difference. UPS, I also think this one's interesting. You can kind of come back and look at the prior breakout here at 195. Today we had a nice bullish engulfing formation where today's candle engulfed or completely swallowed up the prior day's bearish candlestick, and we should continue to work our way higher, although it will be choppy. I wouldn't expect it to just go immediately to 210. It'll probably bounce for a couple of days, sell off for a day or two, but should work its way higher in the near term. On the bearish list, again, these are not so much that I'm ready to take an action right now, but I kind of look at CRM and say, okay, we're down at this level. If you bounce up and just create kind of this inverse cup and handle type of idea, a bounce underneath, kind of around 165-ish. That's a pretty good size bounce, but if you could get up in there in that general area, I think that's where it's a really compelling short setup. GME, this is GameStop. These meme stocks, I think the turning of the economy, the turning of the Fed, the turning from quantitative easing to quantitative tightening, tighter money supply, all of these factors work against these names. And then there's just been some news where basically these corporations are doing things that are kind of a little bit screwing over the small guy and the whatever they call themselves, the apes and so on. So on the bounce here, I think I want to get short the AMCs and the GMEs, the GameStops of the world. And then last but not least, gold, which we've talked about. I think we'll probably see a bit of a bounce. And on the bounce, I would re-up, but we probably take profits here and then look on this bounce back up to 161 or so to reinitiate shorts. This has been a great trade, a very low volatility asset that's been experiencing some good bout of volatility, which is kind of nice. Low beta, but you're getting a bigger beta move in the direction you expected. Kind of puts you in a nice risk to reward because your stop can be tight, but your reward grew to become pretty good sized in a short period of time. I think this is one where I would be inclined to kind of take money off the table and then look to reinitiate those shorts at that higher level. So markets, I still think we're in a bear market, but, and this is a big but for me, markets in the short term are more of a buy in my view. Non-farm payrolls tomorrow morning, I don't know what it's going to be, but it looks like the markets want to bounce. And so even if there's a little bit of selling, assuming we're not just blasting below today's low, which obviously I would be on my heels and wait and kind of look things over if that were happening. But assuming we're down a little bit or whatever, I'll still look to be a buyer. If it's really ugly, okay, we'll give it another day or two. Earnings only Friday left, so AU, which is kind of interesting in the gold mining space, a few other companies reporting, but nothing major. Hope you've enjoyed the market roundup. Have a great rest of your day. Have a nice weekend ahead, and we'll see you next time. Goodbye, everyone.